Have you ever walked into a bank and felt overwhelmed by all the different types of accounts they offer? Checking, savings, money market, certificates of deposit, it can all start to blend together after a while. Stick with us for the next few minutes as we take a tour through bank account land. Our first stop on our bank account adventure is the classic checking account. This trusty workhorse of personal finance is a must-have for most people. Checking accounts are designed for your everyday transactions like paying bills, cashing payroll checks, and buying coffee. The main perks are easy access to your cash via debit card purchases, ATM withdrawals, online banking, and the ability to write checks. Most checking accounts come with a few neat treats as well. Many banks offer reimbursements on ATM fees if you use another bank's machine. You'll also get a checking account debit card for swiping purchases. Some even throw in cell phone protection if you pay your monthly bill with the card. Perks are nice, but one downside is you usually have to maintain a minimum balance or pay monthly maintenance fees. Banks have to make money somehow. Now let's cruise on over to savings accounts. These are perfect parking spots for your emergency fund and any other cash you don't need right away but want to grow over time. Traditional savings accounts offer higher interest rates than checking accounts, but the rates are still pretty paltry these days. On the other hand, you have 24/7 access to your dough, and the FDIC insures your balance up to $250,000 per depositor. Savings accounts are great for lazy money that just needs a place to rest while it accumulates minimal interest. But what if you want something with a little more oomph? Then it's time to check out money market accounts. These hybrids behave similarly to savings accounts in terms of access and FDIC insurance. However, the big perk is higher interest rates since the bank can invest your balance in short-term securities like CDs and treasury bills. Money markets usually require minimum balances upwards of $1,000 to avoid fees, but the returns can be worthwhile. Speaking of CDs, let's cruise over to the certificate of deposit portion of our tour. CDs are a good option if you have cash you can truly commit to leaving untouched for a set period. When you open a CD, you agree to keep your balance parked for a specific term that ranges from a few months to 5 years usually. In return, the bank pays you a higher rate of interest compared to regular savings accounts. It's a nice compromise if you want slightly better returns than a standard savings account but still have access on a known timetable. The catch is that if you withdraw your funds early, you'll be hit with a penalty. So only put money in a CD that you truly don't foresee needing until maturity. It's sort of like locking your cash in the bank's safe for an allotted time. Come what may, stick to your commitment and you'll be rewarded with that attractive interest rate. Just beware that rates often drop once your CD matures, so be prepared to shop around for the next best rate. Now that we've covered traditional savings and CD vehicles, let's cover some lesser-known options. First up, interest-bearing checking accounts. As the name suggests, these hybrid accounts aim to offer the perks of regular checking with a sprinkle of interest thrown in. Minimum balance requirements are generally higher than normal checking to make it worthwhile for the bank. But in return, you earn dividends or interest on your daily balance like a savings account. These can be a prudent one-stop shop if you have enough cash flow. Another intriguing option is the rewarding high-yield savings account. Not to be confused with basic savings accounts or money markets, these electronic-only accounts offer a much higher interest rate compared to standard savings vehicles. How do they pull this off? By operating completely online with no physical branches, these banks pass along their lower overhead to consumers via market-beating returns. Some institutions boast APYs more than 10 times the national average. Of course, there are often limitations on withdrawals and monthly transactions to keep their costs down. But as an interest-boosting stash, high-yield savings earn their name. Did someone say high yields? Let's cruise through the world of money market mutual funds now. These aren't actual bank accounts, but rather low-risk investment vehicles managed by financial firms. Money market funds behave similarly to basic money market savings accounts in that they offer great liquidity and very low risk. Your cash is invested in very short-term securities to keep volatility minimal. The key perk of MMFs is they aim to offer higher returns than money market savings accounts by virtue of their size and market prowess. Account minimums are generally higher at around $1,000 or more for retail investors. But for bigger balances, the potential extra returns can be worthwhile. No bank account tour would be complete without mentioning brokerage accounts. While not technically bank accounts since they are managed by investment firms rather than banks, brokerage accounts deserve an honorable mention. These versatile vehicles allow you to seamlessly purchase securities like stocks, bonds, ETFs, and mutual funds. In addition, most brokerages offer FDIC-insured cash sweep programs where uninvested funds sit in bank deposit accounts behind the scenes. Brokerage firms tend to offer rock-bottom transaction fees or even free trades nowadays too. These accounts are excellent core holders for investment portfolios alongside traditional personal finance accounts. Phew, what a whirlwind trip through bank account land. By now your head is probably spinning from all the options. Don't worry though, now is the time to pull out your wallet and take inventory. Figure out your financial goals and needs, assess your risk tolerance, and decide which accounts make sense for you. Remember, you don't need every type of account, but layering a few complementary vehicles can optimize your financial situation. With diligent shopping around, you're sure to find a mix of accounts to fit your lifestyle and savings strategy. The beauty of personal finance is that no one size fits all. Feel free to customize your bank account approach as needed. Maybe you opt for a checking or high-yield savings combo, then branch into CDs over time. Or potentially choose checking, reward savings, and money funds. Get creative and don't feel locked into any boxes. Banks exist to serve you, not the other way around. This was just a primer to spark your imagination as you mold your perfect banking setup. Banks are always trying to one-up each other, so don't hesitate to play them off each other. With a smart sampling of the right accounts in your arsenal, you'll be well set up for financial wellness. We hope you enjoyed the tour of bank account options. Be sure to like, subscribe, and share this content with others who want to optimize their personal finances through wise account decisions.